Fed members have been more dovish in their commentary over the past week, leading many to believe that weak economic data will give them the confidence to lower rates at their third straight meeting on December 18th. That was checked off by this week's ISM surveys and the employment report on Friday. Those data probably closed the deal on a 0.25% rate cut, regardless of how next week's inflation data turns out. Our next report telling you more.
The big question now among market participants is, will the Fed cut rates in December? Economic data and Fed commentary point to a cut rather than a pause. There was a significant drop from expectations in the closely watched US ISM Services Index report for November. The ISM blames election ramifications and tariffs, with cautionary outlooks related to the potential impact on respondent-specific industries for the downturn. The employment component dropped too, while the prices paid component was little changed. Overall, it shows that economic growth slowed in the December quarter and lends credence to the narrative of a rate cut at the December Fed meeting. This is particularly true given that the manufacturing ISM index remained in contraction territory. While Fed Chief Jerome Powell called for caution on further rate cuts, other policymakers have been more dovish in their comments this week. A softish US jobs report also favors a December rate cut. Economists say with the jobs report showing that the economy added a little over 200,000 jobs and the unemployment rate rising at 4.2% as predicted, a 25 basis point rate cut on December 18th is likely. The rise in the non-farm payrolls has to be viewed keeping in mind the returning Boeing workers who were on strike through October and the return of workers whose numbers were affected by Hurricane Milton in Florida and other places. So the real hiring figure is much lower than what the data shows and the cooling labor trend remains in place. James Knightley, chief international economist at ING Markets, said, "On balance, this report keeps the 25 BPS December rate cut narrative in favor over a no-change outcome. The market is currently pricing 23 BPS out of a 25 BPS cut versus 16 BPS just ahead of the data release." He added, "We continue to think the Fed will indeed cut by 25 BPS just to keep policy moving from restrictive territory towards neutral." Investors will also eye next week's inflation reports. However, many expect the Fed to overlook the price pressure readings. Also, looking ahead, it remains to be seen what effect President-elect Trump's economic policies will have on the job market next year. This includes massive tax cuts, massive deportations, and harsh tariffs. A reduction in government bureaucracy is another goal of his latest nominations of friends and family. The government's recruiting practices, which have been essential in the overall recovery from the pandemic, might be affected by that. For now, the Fed is focused on the jobs market, even as Powell called the risks to the labor market diminishing. Business Bureau, WION World is One.